Hello out there in cryptocurrency land. Welcome back to Real Crypto, where we take the markets one leg at a time while keeping the market cycle in mind. Today we're going to discuss Bitcoin 10K. There appears to be a wall up there, and not only in terms of price action, but also in the options market. We're going to discuss that in a little bit. But first, we're going to talk about some price action. So my last video, we discussed Bitcoin, big test here at 10K, and then possibly languishing underneath that 10K level for quite a while. So we have been underneath the 10K. It's only been a couple of weeks since my last video, but you can see here comfortably underneath 10K. Our volume is very minimal, however. I think at some point, probably, hopefully in the fairly near future, we do get a move up above 10K. I do like the price action that has been laying out over the past couple of weeks. But right now, something very interesting is happening, and it really has less to do with the charts than it does with kind of a, not really an advanced option strategy, but an option strategy. And so for this, we're going to go over to the Durabit Options Exchange. If you don't know it, Durabit, I'm not even sure how to pronounce it. Durabit is, they do futures, they do options, they do all kinds of derivatives with Bitcoin and Ethereum as well. But something interesting happened recently. Now, so if you're not familiar with options, a quick walkthrough, as quick as I can get. When you buy an option, you are basically taking a bet that Bitcoin, in this case Bitcoin, is going to be above whatever the strike price is, which is in this middle column here. So let's say $9,000. You're going to bet that Bitcoin is going to be above $9,000 by the end of the expiration for the contract. This particular contract expires June 26th, and this is when the wall of $10,000 Bitcoin will likely expire, and then from there, anything is possible. Now, options are like any other market. You have a bid and you have an ask. You can see right here you have the bid. If I can make that a little bigger for you guys. There you go. So you can see here you have a bid and here you have an ask. Okay, and now each of these strike prices is going to have a different bid and a different ask. All right. And the reason is because that's going to be the difference between the strike price. So this one is 8,500 and our current price, which is 9,600. So the difference between, let's do 8,000 for easy math, between 8,000 and 9,600 is $1,638. Okay, so right here, you're gonna, the ask on this is 1,707. So as you see with a few days left, you actually have to pay more than the difference in the value between the option strike price and the current price. The reason is you're buying time. That's what's happening there. You're buying time, so this thing can get further away from the $8,000 level. And let's say you buy this for $1,707. That's implying that Bitcoin is going to be above $9,700 by the time of expiration. And you can actually, for every single dollar over $9,707, you will make a dollar for dollar gain on your option. So you're essentially paying $1,700 to leverage an $8,000 asset. All right, but you have to be above this price right here. And that's where this story gets a little bit more complicated. So you want to buy this, right? Well, what if you want to sell this option? What if you actually don't think it's going to be above 8,000, or in this case 10,000? We're going to discuss this $10,000 option and above right here, okay? So let's say $10,000, you're going to pay $43 for the $10,000 option to expire on June 26th. What that means is if Bitcoin does not get above $10,000 by June 26th, your $43 is gone. It's kaput. Now you can sell it prior to June 26th, but for this example, we're going to assume everything is going to expiration. Okay, so this option expires, and if you buy that for $43, you are not getting that $43 back. But you know who is getting that $43? The person that sold you the option is going to keep that $43. And that's where this gets interesting, and that's why there may be this wall at $10,000 on Bitcoin, at least until Friday. So one thing about options is pretty cool is, you know, there's volume. So here's your volume column for all the options. This open is what's called open interest. They actually have to keep track of all these contracts, as I'm sure, you know, that makes common sense, right? So we get a loose report, which is this column called the open interest. These are all the contracts that are open. So for the 7,000, there's 1,372 contracts. for this $7,000 strike price. Now, these people could have bought lower, they could have bought higher. It doesn't matter. These are open contracts. Now, if you notice here, we have strikes going all the way back down, but you can notice that the option open interest is fairly low. So here's 97.50, you got 677, 1,300, 600, 1,000. Well, when you get to 10,000 and above, these open interests actually start exploding. The number gets much more elevated than what you see here. You've got 10,000 at 4,200, 10,500 at 2,000, 11,000 at 4,300, 11,500 at 2,132, and so on and so forth, all the way up until 32,000 strike price. If anyone thinks Bitcoin is going to 32,000 by, this Friday, whatever you're smoking, I would like some of it because it must be very good. And this makes no sense. Like, no one in their right mind would actually sit here and actually buy these options. No one in their right mind. Now, we all know that most retail traders are not in their right mind, but most aren't this insane, okay? What this means is this: in all likelihood, now I want to preface this with saying I don't know when these were sold, okay? I have no idea when these were sold, but if you want to remember, going back to our example here where you purchased the $8,000 option for $1,700 and you gave that money to someone, or I think it was 9,000, whatever, you gave this money to someone. Well, that same person that wants to sell you an option, they don't have to wait for you to buy it from them. They can actually go to this bid price and just sell it. So right now, if I wanted to take $650 home, regardless of the consequences, I could go here and sell this $9,000 option for $650. I could do that, okay? Now, there's a lot more complex logic with options and a lot more other stuff I'm not going to get into with this video, but needless to say, don't do that, okay? I do not want you trading options, especially on something like Bitcoin, especially if you do not understand the options market. So don't do this, but I'm using this as an example. So what this reeks of to me here is this is a lot of Bitcoin on the line, because when you keep in mind the way these contracts work, if I'm not mistaken, and if I am, please leave a comment down below, is that for every single Derbrick contract, you're actually locking up 1 Bitcoin for that contract. So in other words, if I do want to sell one of these contracts, I have to give Derbrick a Bitcoin, and that goes in as collateral towards this options position that I'm taking. Because, the one thing about an option is, let's say we do get above the $10,000 strike price, you can actually take my Bitcoin. Now, you can't take it, you actually have to buy it for $10,000, but you can, it's called calling away. You can call away my Bitcoin. So someone up here has put together a tremendous amount of Bitcoin at hoc, essentially, to collect whatever this now, in this particular situation with 3 days left, there's nothing here to actually bid. No one's actually bidding on this. But I don't know, about 3 weeks ago, 4 weeks ago, 5 weeks ago, maybe there was a bid here that was advantageous for whoever is selling these options. This is not people buying options, more than likely. This is someone selling options, trying to collect the premium and just keep it. So whoever has enough Bitcoin to fork up, I think it's about 100,000 Bitcoin is what I believe this all adds up to. Whoever has that much Bitcoin to put up, sold these options, likely has enough Bitcoin to hold the price down below the $10,000 strike price. Because if Bitcoin does not get above this $10,000 strike price, they get to keep all of this money. All of these will expire worthless, and all the premium, whatever it was, however many dozens of dollars or hundreds or thousands it was, will end up expiring worthless. Okay? Now, the other side to that coin is that, okay, maybe someone really smart actually thinks Bitcoin is getting over 10,000 and just bought the crap out of it. Well, I guess that's a possibility, but whoever thinks Bitcoin is going to get over $12,000, paid probably a hefty premium for that and did it 3,500 times, it's highly unlikely that that is the case. Okay, highly unlikely, because if it doesn't get to 12,000, they're out all of that money. So either someone really stupid bought a bunch of options, which is possible. What's more possible is someone sold a bunch of options at all the different strike prices, probably the day that volatility was high and options were expensive. So you can see here with just a few days left to go, you go down, what are we at, $9,600, you go down $100 and it's $200 option. Okay, that's not too bad. That's not horrible, right? So you're going to bank $200, and odds are most of these were more expensive. So let's do something real quick. Let's go out to these other expiration dates, because this is one contract that expires on June 26th. Let's go out to July 3rd. One thing I'm going to look at is, let's look at the bid price here, and then let's look at this open interest column, and let's see what's different. So June 3rd is another week. All right, so here's another week, and there's the $10,000 strike price. And here's the open interest column right there, open interest. The open interest down here is in the hundreds, and not even high hundreds. Your high is 543. All right, and going out a week, you've got going up to $10,750. You're collecting $67 if you wanted to sell this option. If you think it's not going to get above $10,700 by next Friday, which is what I believe July 3rd is. Just double check. Yeah, it's next Friday. Just double checking. So yeah, if you think it's not going to get to $10,700 and you just want to get yourself $62, you can go ahead and sell this option. All right. Well, it appears that someone did that a lot for this Friday's strike price. You can see here several thousand contracts have been opened, and especially this one. They were really confident here. They just sold 3,600 contracts. Say it was $10. They sold 3,600 contracts. That's $36,000 that they just pocketed with really no risk. There's no way it's going to 32,000. I mean, that's absolutely absurd. Now, let's go out a little bit further. Let's go out to July 31st. Why is this one different? Oh, that's weird. Okay, so here we go. So here's our open interest, and here's our strike prices. You got $80 for 14,000, and then here we go to September, 14,000. You're paying $360. Right? There's a little bit of open interest here, but not near what we have. And going out to December, you can see 14,000. You're paying $1,000. You're paying $1,000 for that. Actually, you're paying $978. You could sell it right now for $933 if you think we're not going to 14,000 by December. I'm not here to argue whether that's the case or not. Just kind of give you a little bit of a glimpse into how options work. So whoever's selling all these options on June 26th, definitely it is in their best interest to keep it below $10,000. To keep it below $10,000, they're going to eat all of this. Now, what happens after June 26th expires? This becomes the current contract, and really, there's not too much here holding us back. Now, that's a little bit about options. I hope that was clear. If it's unclear, please leave a comment. I will reply to it. And yeah, just leave a comment. But after Friday, it's game on. After Friday, there's nothing necessarily holding us back from breaking this. Now, if you look at this pattern, we have an ascending triangle here on Bitcoin, and the way that could play out is we could do anything and then pop up. It could be the close on Friday. It could pop up on Saturday. Maybe it pops up on Monday. It's hard to say. Maybe it doesn't pop up at all. All I know is that there is an incentive for someone with a tremendous amount of money involved here to keep the Bitcoin price low. Now, I know I mentioned 100,000 options earlier, or 100,000 Bitcoin here. Doesn't seem like this adds up to 100,000. I actually read an article that led us to this conclusion. So I'm going to post that in the description below. You can check that out and read a little bit more for yourself. They didn't really get into what I dug into here, which is why I'm making this video, but they basically said that, hey, there's a lot of options expiring, and these Durbird options account for about 70% of the options in the Bitcoin marketplace globally from their article. So anyway, that could be one of the reasons why Bitcoin is going to be stagnant for the rest of the week at a minimum, and we'll see what happens after that. After that, anything's on the table, including maybe an explosive move with Link, as Link attempts right now. Looks like it's trying to get back over all-time highs, and then off in a huge, massive run. But if you want to know more about that, join my Real Crypto Power Hour, and we talk about these every single day. So, all right, guys, well, thanks for joining me today. If you guys did like that, please feel free to hit the like button and subscribe if you have not already subscribed to my channel. Other than that, if you guys want to get involved in the community and have some fun conversation, or just want to chat with me, you can sign up for our Real Crypto Slack chat room. You can do so here on our front page. And quick update on the Power Hour. We actually updated, and we're going to start tracking Binance US coins. And we also are starting to timestamp our videos, which was a user suggestion, and I think a very good one at that. So, all right, guys, thanks for joining me today. I appreciate it, and I will see you next time. Bye-bye.